Most people believe an investment property takes money out of your pocket every single month, but a brand new one can do the opposite. It can pay you through a deduction you never actually spend. It's called depreciation, and it is the most misunderstood and quietly the most powerful number in Australian property. Let me show you exactly how it turns a cash loss into an after-tax gain. And to be clear, these are Australian tax office rules and real quantity surveyor figures from firms like BMT and Duotax. This is not a sales pitch. Here is the core idea. Every building and everything inside it slowly wears out. The tax office lets you claim that wear and tear as a deduction, even though no money actually leaves your bank account. That is the whole trick. It is a non-cash deduction. Now, there are two types of depreciation. Understand these two and you understand the entire game. The first is Division 43, capital works. This is the structure itself, the concrete, the bricks, the actual building. You claim 2.5% of the construction cost every year for 40 years. On a new apartment built for around $480,000, that alone is roughly $12,000 a year for 4 decades. The second is Division 40, plant and equipment. This is everything inside that wears out faster. The oven, the dishwasher, the carpets, the blinds, the air conditioning, even a share of the building's lifts and gym. These items depreciate quickly, often several $1,000s in the early years. Add both divisions together, and a brand new $600,000 apartment can produce roughly $12,000 to $18,000 of deductions in the first year alone. But here is the catch that most investors completely miss, and it is the entire reason we only ever talk about new. In May 2017, the government changed the rules. If you buy a second-hand apartment, you can no longer claim Division 40 on the plant and equipment that is already inside it. That deduction is simply gone. New builds keep both divisions. Established properties keep only the structure. That single rule change is why a new apartment is a fundamentally better tax asset than an older one. Same suburb, same rent, completely different after-tax outcome. So let's run the actual numbers on a real example. A $600,000 new Melbourne apartment. It rents for about $28,000 a year, but the mortgage interest, the body corporate, council rates and management fees cost you around $33,000. On paper, you are $5,000 in the red. Now we add depreciation. Let's say $14,000 for the year. Your taxable loss is no longer $5,000. It becomes $19,000, even though only $5,000 actually left your account. At a 37% marginal tax rate, that $19,000 paper loss hands you back about $7,000 at tax time. $7,000 back minus the $5,000 you were genuinely down. The property flips from minus $5,000 to roughly plus $2,000. After tax, it pays you to own it. That is the cash flow flip, a loss on paper, a gain in your pocket. And in 2026, this matters more than it ever has. New laws are quarantining negative gearing and reshaping capital gains tax. But brand new dwellings are deliberately carved out of all of it. New builds are now the last class of property that keeps negative gearing, keeps the 50% capital gains discount, and keeps full depreciation. The rules themselves are pushing serious money toward brand new. 2 honest caveats. Depreciation is not free money, it lowers your cost base, so you may pay a little more capital gains tax when you eventually sell. And these are illustrations. Your accountant and a quantity surveyor's schedule give you the exact numbers for your property. But the principle holds. A new apartment hands you a large non-cash deduction that a 15-year-old one simply cannot. So the next time someone tells you investment property always costs you money, understand what they are really describing. An old property bought without understanding depreciation. A new one, structured properly, can pay you to hold it. If you want a real depreciation schedule run on an actual Melbourne apartment, everything is at solomonbloom.com. And subscribe. This is where we decode Australian property every single week.